Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on some voted tickers by members. We'll start it off with Tesla. The play for Tesla is short, just under 800, put a stop just over 800, as long as it works. And 2 out of the last 3 days, that has been a very good trade. So 2 days ago, we topped out $1.08 below psychological resistance and pulled back significantly. And today we did the same. So I've been day trading Tesla the last 2 days, and today I shorted the morning strength and scaled in a few entries into this huge bull move, used 800 psychological, and definitely exited a bit early. Did not anticipate that significant of a pullback, but just a quick little gain, locked it in. And Tesla's been giving us some good equilibriums as well. On the 15-minute time frame here, we had the low of the day, high of the day, higher low, lower high. We did break support here, but only by less than 50 cents. So we can consider that a double bottom. Again, that's a fraction of a percent. Another lower high at 783.10, another higher low, and then there's your bull break. 783.10 breaks, and just like that, you get a 1% bull move. So nice to see that kind of follow through. In the end, where do we stand bigger picture? We know number one, volatility is dropping off a bit. Looking at the last 2 days, the range of the last 2 days is smaller than the range of the preceding 4 days before it. When that is the case, I slow down my trading. So what we're looking at is the range of the last 3 days, pretty much just 800 resistance and 761 support. And we bounced off of the low 760s multiple times, and we've rejected from just under 800 multiple times. On the 4-hour time frame, if we're just going to mark these two levels, let's actually even go to the hourly. And we'll just mark these two levels and can see that that is the channel that we are watching. And we're just waiting for a break of that channel to open up volume and volatility and trading opportunity. And here we are smack dab in the middle of it after hours. So as long as we are in this channel, I'll either play off of resistance or play off of support if the short-term time frames are extended as we head to those levels, and I will bottom fish or top fish them. Otherwise, hands off until we break. Bigger picture. Weekly inside bar, that's going to close and stay a weekly inside bar pending some crazy action. Elon Musk is on Joe Rogan again. I haven't watched the second version of that. And if we see a bear break of 761, it will be a high, low, lower high at 800, and we'll see if the bulls can give us a higher low compared to 683. So as far as clarity is concerned, I'd like to see a bear break just to keep this daily range tightening up in that manner. SPCE, so big bull move the last couple days. We did see some profit taking, but we did break 2107. I take that back. We rejected. That was a great top fish. I was not watching SPCE today. So the hourly time frame is still in an hourly uptrend. We're looking for an hourly higher low to form compared to the low of today. But what were the short-term time frames doing when we headed up to that level? Well, we knew 2107 is the level of resistance. The hourly RSI was in the upper 70s. The 15-minute RSI was over 80, and the 5-minute RSI was in the upper 70s. That's my kind of top fish. I want as many time frames as possible extended, whether it's off support for a bounce or off resistance for a short. And this was a great example. Just like Tesla today, the first 15 minutes, we rocketed up 3% with no support established, reject from resistance, big pullback. Here, reject from resistance, and not a huge pullback, but certainly worthwhile as a bear. All about 2107 on the daily time frame. If we lose the hourly uptrend without breaking that level, the bulls will have to form a daily higher low compared to 1555. We will anticipate they will be able to because of how much space the bulls have to work with above that support level. Work. I was watching work at the end of the day today, and this is a very interesting one. So we know $30 is the resistance level just above it. Look at all these rejections and no closes over 30. And what it's giving us is an ascending, an ascending triangle pattern. So there's our line in the sand. Look at all those rejections. And it has recently come out, and correct me if I'm wrong because I'm not following the fundamentals of work, but I do believe that we did see form 4s of insider selling at $30, which makes sense to me why we keep rejecting from this resistance level if there are shares being unloaded there by insiders. But this is your ascending triangle pattern with a horizontal resistance line and higher lows in a tighter and tighter range. And I watched the last hour of trading on work because I was going to play a bull break on 30 if we got follow through, but we were just grinding this resistance, and every time we hit it or broke it, more shares would show up at 30. So I would not be surprised in the slightest to see more form 4s come out to show selling at this level, because to me it looked like there was a market maker with a significant amount of shares, and they're of course not just putting 500,000 shares or more on that number. They're putting 5,000 shares, and then it gets bought up, and then they put 5,000 more, and they're just unwinding a position at that level. And as soon as the bell rang, the price shot up over that resistance, and that is because as soon as the bell rang, that market maker shut down. You could flip, imagine it's a robot, just flip the off switch. So here after hours, we're up at 30.45, and I'm very curious to see how this plays out. Again, I have no position, but 30.47 is the resistance level. We need that to break in extended or in regular trading hours, and we need to close over 30. What I'm going to be curious of tomorrow is if we open above 30 on a gap up open, do we instantly see selling pressure of Mr. Anonymous, whoever's unloading significant shares at 30, continuing to do so? So I will be very interested if we gap up open to see how the first 15 minutes of trading goes on that gap up open. Need to close over 30. BYND, big bullish reaction to earnings. A little bit of profit taking today and a pullback, healthy consolidation, no major red flags. We saw a pretty sharp pullback from the high of extended hours, 131 down to 117.12, and we have a tightening hourly range because that's a very wide range. Looks like an hourly lower high formed at 125.77, and on a pullback, the bulls need to hold 117.12 for a higher low. So essentially, it's an hourly equilibrium between these levels. And the most important support for me is 117.12, and the most important resistance is 125.77 before we look to 131. Overall, the bulls are holding on. If 117 support does break, we will look for a daily higher low to form, and anything above 88.51 is a daily higher low. Bulls have plenty of space. CCL. So CCL, this is another thing to note because a member sent me a message and asked me, I forget what they asked me. They asked me something about whether I'm trading CCL or not. And I said, I traded CCL every single day for 6 days in a row. And the last 2 days, today and yesterday, I have not traded it. And there was no real reason why. I just didn't see a setup that I liked. But I went and I looked at this daily chart and I said, good job, Dan, because the last 2 days has had the least amount of range in the last many days, pretty much since this breakout. And it has also had the last 2 days the lowest volume in the last 2 weeks. So why does that matter? If I am a day trader, the most opportunity, pretty much we can make an equation. Range plus volume equals opportunity as a day trader, and of course as a swing trader as well, but looking on different time frames. So why is that the case? If I'm looking for 1% to make on a trade, and the day's range of the stock for the entire day is 3%, it's going to be much harder to make my 1% on that stock than it is if the day's range on that stock is 7%. There's way more opportunity in there, and way more volume and way more liquidity. So again, range plus volatility, I think that's wrong. Range plus volume equals opportunity. That's a new one. Write that down. I'm going to write that down. So where do we stand? We're building a base of support. 12.75 was a low. We dropped down to a lower low yesterday. Bulls recovered today, but I would consider anything under 14.89 as just a daily lower high. Have we changed the hourly trend back to the bulls? No. Low yesterday, nice little bounce. I guess if you want to, let's take off extended hours, you could call that a little hourly trend change with a higher low and higher high. So on this consolidation, we are looking for an hourly higher low compared to 12.98. But as far as the daily chart is concerned, the bears are going to keep control as long as 14.89 remains resistance. And checking in on the weekly chart, not a whole lot of info. Weekly inside bar, ranges tightening up. Just scanning around for the time frame that's most clear for me. So this would be a potential inverse head and shoulders on the 4-hour chart. There's our 1489 key resistance. Came down and we dropped to a lower low. If we see this bounce continue but fail to break 1489, which is still 10% away, we'll look for a 4-hour higher low compared to 1258, and then we'll see if the bulls can change the 4-hour trend. I did not mean to draw that line that large. I'm not looking for that kind of a move. I would just be looking for the inverse head and shoulders to see if the bulls can shift the momentum back in their favor after so much profit taking from the 1683 top. So it'll be all about 1489 short-term resistance for the next couple days. So that's where we stand on these highly volatile names. I appreciate you watching, and we'll see you next week. We're not going to end it with a nature video today. Today is a day for mourning. Unfortunately, got some bad news. Been observing Mama Duck sitting on a nest somewhere based on her behavior, and generally they'll lay their nest away from where they're going to raise their babies, and then they walk with the babies from there to the pond. And she showed up yesterday limping, walking to the pond, which she has never done. So, unfortunately, and then they slept. Mom and Dad are together, but they both slept here in this pond for the first time in weeks and weeks. And it was really cold last night, so she certainly didn't just abandon her eggs. I think something either got the eggs or got the freshly hatched babies as she was walking them to the pond. She's a little shaken up. I'm not sure if her wing is hurt because she wasn't flying. Her leg is definitely hurt, but I don't think it is serious. I think it's going to heal. And I remember when she was a baby, one of her siblings had a hurt foot for a while as well, and that healed up. So this poor duck has had a tough life. She watched her mom get taken by a predator last year, right before I moved in here. So Dad raised her and 7 or 6 other siblings, and now I think year 1 she's not going to have babies. It's a bummer, but it's nature. So I'll keep you posted on that, and I'll see you all next week.